what should investors, what's a reasonable expectation from an investor's point of view?
I think the one thing that has, everyone was pricing in for a recession as early as 2008.
Yeah.
We were not there yet.
Yeah.
And if you look at the US, and Trump kept saying the markets are now up than they've ever been with any other president.
Yes.
So everyone else was pricing in for a recession and was sort of going slow, but it didn't come. So the recession was only pushed. Now we only got to breach the 2.5% global GDP when COVID came. Yeah. So once this thing came now, that's when we've seen all these sudden panic drops. Yeah. So ideally, it's right to say that COVID has now brought us deep into the recession. Yeah. Or
how
has
long do you
brought the
think we've been in a recession?
I predict it to be going to go through for another year or so again, until the most important thing for this recession is the COVID. So once this is addressed, I expect, there'll be that optimism,
Optimism,
Yeah,
yes.
that optimism is going to definitely shoot the market up.
Yes.
But I don't expect the markets to start moving after 1 year.
Yes.
As the governments are putting in more, your Asian markets are doing all these stimulus packages. Your American, European are doing all these QEs and to prop up the economy.
Yeah.
As the government does more of this, I think the financial markets are going to sort of stabilize. So it's not 1 year for the financial markets to go up.
Yeah.
I think the time will be any time now. Looking at what the global markets are doing, and of course, for African markets might replicate that. So I think for us, there's keen protection from the government for the financial markets. It's not in their best interest for them to fall. If you look at Kenya, we are net in debt. Yeah, it's not in the best interest for us to lose FDIs. It's not in our best interest for the currency to fall, because of our net repayments. I think this second quarter in Q4, we have both interest payments and maturities on Eurobonds, So if we are going to let everything fall to the dogs, then it's going to be very costly for the country. And that in itself is an incentive for the government to come in. So for an investor, the time is now.
The time is now.
Yes.
Interesting. Invest when you're still in the recession.
Invest when you're still in the recession. Buy when everyone is panicking.
Yes. And anyway, I think that's what makes investing very interesting, because you always have contrary opinions.
That's what you're paid for.
That's what you're paid for.
Yes.
You buy when others think it is expensive.
It's the end of the world.
Yeah.
That's the time to get in.
Exactly.
Yeah.
And remember the last time when US was pumping a lot of money in the economy, that money eventually ended up here.
Correct.
And that really
Ticked up. Yes.
I think the question now is, stocks are getting cheaper and cheaper in the developed economies, considered to be the safe havens.
Yes.
And also they are getting cheaper and cheaper in the frontier markets
Correct.
and emerging markets. The question will be, where will the investors be allocating more?
That's a very good question.
Yeah.
And I'll answer it in two ways. One, remember you can never put all your eggs in one basket.
Sure.
And that's why we've seen them bringing these FDIs to our country.
Sure.
So all these in a portfolio, and you are a portfolio manager, you can see is in your portfolio you have sections, So I'm going to allocate these to bonds, I'm going to allocate these to equities, hedging assets and all that stuff. Again now, especially for the big funds, is you cannot put all, America is almost now too small for them, You cannot put, and at times they are almost overweight in the developed worlds, That's why we came to another level, they're calling the emerging. Again, there's only so much you can allocate to the emerging markets because of diversification. So you have, of course, to come back to your star performers in the frontier. That's your Kenya, your Nigeria, your Cairo, your BRVM around the Western region. So there's always an allocation, an asset allocation, even in the global markets. And that's why we have all these frontier-looking indices. You have the MSCI, you have the FTSEs, you have all these guys that have been rated. So in terms of now, it's better to be in the States, yes, but they are overweight. They need diversification, they need the better returns, so they're definitely going to bring money back to our country. And we've seen this a couple of times. In 2008, we bled, they came back. Understand? Yes. So they're definitely going to be back.
How much should we price in the recent oil price war? It seems to be underplayed by this whole COVID thing.
Correct.
But it's a big issue, especially for oil-dependent countries.
Correct. I mean, assuming the COVID does not exist, for us as a net importer of oil, it's actually very good.
It's a good thing for us.
It's very good for us.
Yes.
I mean, it's bad for our brothers in the West, Nigeria, as their economy is heavily dependent on their oil exports. They're a net exporter of oil. For us, when you come back, we've made major savings, and even from the press release by the central bank, is even prior to them coming back to buy the hard currency, they had mentioned about the savings they'd made on oil. Now that we are talking about $35 a barrel, I mean, it's almost half from what we used to get it at. So for us, it's a good thing. We've seen Saudi Arabia and Russia, as they keep fighting, Saudi Arabia now is adding a million barrels to their production.
Yes.
Russia is adding 500,000 to their production.
Yes.
All that is good news for us, bad for them because the prices keep tanking.
Yes.
Whereas Texas, we are talking about 32. You know, Brent crude, you're talking about $35 a barrel.
Yes.
So for us, I mean, it's a really good thing for a net importer of oil.
Yeah.
One, because in the next 2 to 3 months, it should reflect down to your retail, to your pump. At the petrol station, you know,
Yes,
to
yes.
your kerosene, to everything should reflect that.
Yes.
That brings down almost the food and fuel part of inflation, you know.
Yes.
So it comes way even lower, below average target, you
Yeah.
know. So when you come to the savings we're going to make on the hard currency, we are now spending less greenback to pay for it. So our receipts on oil again keep.
How long do you think this will last?
The oil war. So I think, I mean, Saudi Arabia being the major OPEC, they're almost the de facto leader of the OPEC producing nations, might eventually be the winner. Because Russia came out rightly and said, you know, our sovereign oil fund will protect the producers for the next 10 years, even at free, even if they're giving oil for free. Of course, you know, it's about thumping your chest and who is the bigger man here. But I expect Saudi Arabia, the more Saudi Arabia increasing production and cutting prices, the more Russia are forced to get back to the drawing board and to the round table and discuss. So I expect these to, again, my target is in 6 months. They should have reconvened. I think they're supposed to reconvene in 2 months or so. But I don't expect Russia to play ball in the first sitting. But the more these prices go, especially when you start seeing them sub 30, you know, we're talking about the 20s, I expect them to sit down and discuss.
And have a conversation.
Yes.
And have a conversation.
So yeah, so my target will be around 6 months.
Yeah. So, looking at the past, other financial crises in the markets that we've gone through, you're convinced it's time to buy?
It's time to buy.
It's time to buy.
It is time to buy.
Fantastic.
Correct.
Thank you. Keep watching, and we'll take a pause there, take a breather, drink some juice, and then we'll be back. Stay tuned.